Yeah, I'm the founder of Nordic Impact Funds. As Jakob mentioned, it's a small investment fund focused on East Africa. And I'm an advisor in innovative finance with the Danish Red Cross. So today I have two hats on. I'll talk a little bit about both, most about what I do at Red Cross, but also a little bit about our investments in East Africa. Let me just share my screen. I have just a few slides. So, do you see my screen?
Yes, we can see it nice and clearly. Okay,
perfect. Yeah, so in today's talk, I'll talk about new ways of tackling and financing development and humanitarian challenges, mainly with investment capital or blended capital instead of pure grants. So what is this innovative finance all about? Well, we call it innovative finance, but the finance part is really not very innovative. It's all sort of very well-known instruments. It's just applied to a different context. A context where it's often quite challenging to make the business case. Because people hardly have any money. So how can we find that sort of economically sustainable business case? That's where the innovation part comes in. It's also about trying to change incentive structures. It's about a move from the classical donor-beneficiary relationship to a different context where you have investors, investment capital, and you have customers of businesses. All this, it's not easy, I must say, and for sure grants are still needed. But I believe it's time to spend the grants differently, to try to catalyze more investment capital for this agenda. First, I'll talk a little bit about some insurance solutions, which is one sort of innovative finance solution that we have worked on at the Danish Red Cross. Last year, Danish Red Cross issued the world's first humanitarian CAT bond or catastrophe bond for volcanoes. And what is that? What's a CAT bond? It's basically an insurance. So Danish Red Cross has insured itself at 10 of the world's most active volcanoes, where a lot of people live nearby. And they have insured itself against extreme eruptions. Then we've set triggers for the insurance payout. So if a volcano has a certain height and a certain wind direction, the insurance will trigger, and there will be a payout for Danish Red Cross to initiate evacuation and emergency assistance, rescue, recovery, all this. So it's a way to sort of pre-arrange funding, give certainty that if the very bad event happens, there will be a lot of money available immediately, because often speed is very, very important in these with these emergencies. And it's a way to make sure that the contingency plans that you have made, that you can actually have money to do what you have planned to do. So that same model with the insurance, we are now working on for climate-related disasters as well. So mainly for flooding and for drought, which are some of the most severe events that we are seeing right now in many parts of the world. So first of all, it's about becoming better at measuring and modeling the risk, better at forecasting the risk. And once you have these models in place and can calculate the likelihood of an event happening, you can also price it. And then we work on setting triggers for basically for every step around the disaster risk cycle that you see here on the slide. So you can say that in the old days, Red Cross was mainly focused on the response part. Then more recently, we have moved into anticipation and preparedness. It's a very, very important part of our work as well. And we are increasingly moving into also the recovery and reconstruction and the risk prevention part of the disaster risk cycle. So basically what we are aiming for is to have models for the most sort of severe events that are happening, for flooding and for drought and maybe cyclones and other types of catastrophes, and then be able to have triggers where there's money behind it so that you can actually do something when it happens. So if there's an early forecast of, say, that now we predict that a 100-year flooding event is going to happen, then it immediately triggers some early warning actions. Then you have a 10-day forecast confirming this 100-year event. Then you'll have early action, evacuation, shelters. You will maybe do some cash transfers. Then if it actually happens, then money is released immediately for emergency assistance. And then you can do a damage assessment, and then you can release money for recovery and building back better. So for this, of course, you need some premium payment because it's not free to take an insurance. So this is where the grant element comes in. There's still a grant element. You have to pay an insurance premium. But if the disaster happens, then you will have readily available funds for early action, for response, for recovery, and building back better. Good. Then another type of solution are these impact-linked solutions or impact-linked finance. It's like it's social impact bonds. They have many names: development impact bonds, outcome funds, pay for success models, front-loading models, we can also call them. This is very much about changing incentive structures from financing the inputs to financing the outcomes, and to get money up front for certain investments. This, what we call an NCD prevention bond. NCD is non-communicable diseases. In Danish, ikke smitsomme sygdomme. And they are on the rise on the African continent, to say the least. Already today, it's the hospitals and the whole health system cannot even cope with the treatment costs of these diseases. But on the other hand, there's a huge business case in terms of preventing, because there's a lot of savings from preventing. You save a lot on the treatment cost bill in the longer run if you do prevention. So this prevention bond is about incentivizing health authorities to and public health insurance to implement preventive action without actually taking money out of the current health budgets, because they are already totally full. So investors come with money up front for a preventive intervention, which will result in future savings on treatment. Red Cross and its partners will then implement and deliver on a huge sort of prevention intervention for NCDs, mainly screening, early detection, and some health-related programs for high-risk people. Then the outcome payers, they are the government or the national health insurance. They then only pay, you can say, for the documented savings. So, and you need then an independent evaluator to make sure that this is actually what has happened. So that way you can get upfront capital for prevention, something that no government today is really prioritizing because they simply don't have a budget for it. And then another model is the direct impact investments. At Red Cross, we are right now looking at setting up what we call a humanitarian health fund, which would be direct investments into innovative health solutions that are relevant for humanitarian settings, relevant for the most fragile areas, relevant for the most fragile last mile settings. And then we combine that investment vehicle with a grant facility that will be for Red Cross testing, for Red Cross vetting, for technical assistance, and for distribution of these solutions. That way we leverage the Red Cross Health Network and volunteers in some of the most fragile settings in the world, and to bring these innovative solutions out there where it really matters. So this will also help the companies that the fund is investing in to scale and to de-risk the investment. But without that grant element, these companies, these sort of innovative startups would probably never go to those areas if it wasn't for Red Cross rolling it out. With this, we can then have many more fragile people getting access to quality healthcare. Good. Then we come to Nordic Impact Funds. As I mentioned in the beginning, it's a small demo fund. We are investing mainly for social impact, but we want to do it climate smart, and we want to do it gender smart as well. We have right now 5 investments. 2 of them are not official yet. So as you can see, I just called them agribusinesses. Yeah, we have 3 investments in Uganda. We have 1 in Kenya and 1 in Denmark/Ethiopia. So our first investment was in, it's called Sino Technologies. It's a micro savings platform where you can save as down to $3. And then have it invested professionally into a combination of different unit trust funds, a money market fund, a government bond fund, and a regional stocks fund to get an average return between 10 and 15% on your savings, which is much better than putting your money in the bank, which very few people do anyway. They tend to put it under the mattress or have your neighbor protecting your money or something like that. So it's a really strong solution that builds financial resilience. They have grown since we invested 2 years ago. They have grown from just a few thousand users to 25,000 users. They have now more than $10 million in assets under management. Yeah, it's building a lot of financial resilience for a lot of people in Uganda. Then the second one is ChapChap. That's an accounting system. They have sort of very simple accounting system for micro enterprises. You can have it on a tablet or you can have it just on a smartphone. Then they have added different services. They can credit score you because now they have data on you. Then you can get loans and other types of financial services. You can pay bills and you can take in mobile money, become mobile money agents via the platform. Then there is Jami One, which is also a new member of Access to Innovation as far as, so that's the Danish Ethiopian one, who have also been on an amazing growth journey. They went from a few thousands when we invested until I think they have more than 100,000 users now. So in very little time, they have grown dramatically. They are also credit scoring people in savings groups, and they are providing loans. And more recently, they have started providing insurance as well. So again, really providing financial resilience for some of the underserved groups of people. Then we have 2 agribusinesses. As I said, they're not official yet. One is more of a traditional sort of vegetable business. They are sourcing from many thousands of smallholder farmers and securing their steady offtake, minimizing food waste, and then they are exporting the vegetables. For some of it, they do some processing as well. And then the other one is more of a tech-enabled agribusiness. They have sort of digitized the whole sort of supply chain from smallholders to micro enterprises in Kenya. Also minimizing food waste and providing stable offtake, securing fair prices for the smallholders, and really bringing up the smallholders' income. So yes, then a little bit about how I see Nordic enterprises in this whole system. Well, from Nordic Impact Funds side, we do prefer to invest in local enterprises, or at least enterprises that have solid sort of grounding or anchorage in East Africa, with own people on the ground. But for example, for the agribusinesses, we would definitely like to drive the whole climate or greening agenda for these businesses. So how can we introduce some of the Nordic climate smart inventions to these enterprises? How can we help a sort of traditional agribusiness to become more climate smart? And that's really where I see a lot of value add from Nordic companies. Also, in terms, now I heard that there was the WeWater businesses here. also in terms of providing resilience for the smallholders, in terms of irrigation. They increasingly hit by droughts, where they cannot harvest. If they have access to irrigation, they could they are much more resilient to the droughts. So yeah, I think I will stop here and move to the questions part.
Excellent. Thank you so much, Lisbeth, for a very, very inspiring and hands-on insights on what are the opportunities at hand. Again, for those of you who have questions, you can either raise your hand and I'll try to navigate, or state your question in the chat. But perhaps meanwhile, before we get going, it all seems very promising, and I think everything is always good on a PowerPoint, and this is the way to go. So why don't we see more of this? I mean, impact financing and the financing landscape has been on the move for a number of years. So could you talk a bit more about the challenges that you see to get this agenda on the way?
Yes, I think, there are many challenges. One is that sort of traditional donors are afraid of, still a little bit afraid of funding investors. If they indirectly get to fund somebody who's making a profit, then there's still sort of a little bit of we prefer to give it away then. So there's this for-profit part, which is still a little bit difficult when it comes to more traditional donors. Then from the investor side, there is there's still, at least here in the Nordics, I find there's still quite a bit of skepticism about investing into the African continent. A bit of lack of trust, fear that of corruption, yeah. I think also there have been a couple of Africa investment funds with listed companies, and they have failed big time because they were mainly focused on on South Africa, Egypt, and Nigeria, which all failed because of mainly because of raw material prices way back. So a lot of investors have sort of pulled out of the African continent again. But for the impact investment field, I think a lot of international investors are starting to be there. The Nordics are starting as well. A huge fund was just raised from Norrsken in Stockholm. So it's starting.
Yeah.
And there's huge growth opportunities as well. So I'm sure it will both be a super investment case and a super impact case.
But then, if I may continue, because I think it's quite interesting, because I think we can all see the potential, but we can also see the risks associated with it. So if you should come from the perspective, it could be WeWater, and I can also see we've got Pesito on the call here today. So companies that, or even for that, Globe Housing with Ellen, I mean, if you got an interest as a company and you need to go to private investors and tell this is the place to be, I mean, what are the risks that needs to be mitigated? I mean, of course, it can be difficult with having increased prices on the input side of it, but still, what is the few kind of selling points that you have to bring to the table?
Oh yeah. That's a good question. I think the important for an investor, it's always is there a solid business case here? Have you tested the business case? Have you proven it? Do you have a bit of traction already? Yeah, I think that's it. And then if you're with the impact investor, you also have to prove the impact.
Of course. Perhaps we can come back to the impact, how to measure that. But I see there's a question from Matthew A2i. I'm sorry about my pronunciation. Matthew, will you join in and state your question? Otherwise, I think we could see it in the chat. Matthew is asking, in terms of Nordic Impact Funds, whether you invest in equity or debt instruments. And also the question is, in terms of the Nordic Impact Funds, whether you co-invest with other impact funds.
Good. Excellent question. We mainly invest in equity. We can also invest in debt. We've also done a convertible and is also doing a safe right now. So yeah, so we can do different instruments. Yes, for some of the investments we are alone. For other investments, we co-invest with other impact funds. Okay. So a little bit of everything. Yeah, okay. No, but we definitely like to co-invest in particular with other impact funds, because you know that that they are sort of mission aligned with you, and that they want to continue the focus on the base of the pyramid. Yeah. Okay.
Yeah, as you were talking about, Lisbeth, I can't see. Alan, are you raising your hand or just throwing out your pen? You have to unmute. Alan, we can't hear you. You need to unmute.
It's better now?
Yeah, it's much better now.
Okay. I have a question for you, Lisbeth. And first of all, thank you for a very good presentation. And very interesting. We are a little company who are going to Africa right in a couple of few weeks. And you mentioned something about the challenges in Africa, and Jakob, he asked about the selling points and so on. You answered that you think that a solid business case would be an advantage for small business here, and already practical experience. If I can understand that correctly, it is true that you think that we are going to have a kind of proof of selling before we can do have any expectations from the funds. Not proof of concept, but proof of selling. Is that correctly understood?
It depends very much on the type of investor. Some go in very, very early from idea stage. Others go in sort of more what you call early stage, where you already have a little bit of revenue generation. And other impact funds go in even later. So it really depends. I think for the very early stages, a lot of the accelerators are a good place to start because they typically have sort of a small bit of funding as well. And then of course the angel investor network and these types are probably more suited for the very early stage than actual funds.
Okay, thank you.
And word over to Simon Lacour from Pesito.
Thank you very much. Hi, Lisbeth. Interesting to hear. Sorry, I just came in a little bit late, so I hope you did not answer my question already. But what are your typical engagement when you go into a kind of an equity investment? What kind of engagement do you do?
Apart from the capital.
Yes, apart from the capital, what do you typically, put to the table for the company? Like, do you actively take a role?
Yes, and again, it depends. But it depends on how many other sort of investors that are in, that are also active, and depends on what's the additionality of what I can bring. For most of our investments, we do take a board seat, and we do help them to raise their next round, and leverage the impact investor network that we have. I'm also trying this idea of trying to mobilize what I can from the Nordics of expertise and technologies, and so actually the agribusiness that we are investing in now, we will try to see if we can set up an interesting collaboration between Nordic Innovative Solutions and this more traditional agribusiness in Uganda. So and for I can say that for one of the other companies, we are in dialogue with a Danish sort of similar company to help them with some expertise that they have, but in a completely different market. And the Danish company feel that they can learn from this African market and from the experience that they have, and the African company is learning from the Danish company, which is quite sort of a bit more corporate and professional, you can say.
Okay, thank you very much.
Lisbeth, if I may get back, we talked a bit, you could say, about the financing and how to pitch, but I see a recurring discussion is also in terms of the impact and impact measurement. Yeah. And especially I was thinking in the case where that you suggested here, where you ImpactLinked Solutions, where you got an impact investor supporting activities of the Red Cross, then documenting in terms of the government, and then the government is paying back, you could say, a fee for the services provided. But I would assume that requires a bit of monitoring and evaluation, actually documenting that things are going on as planned, being one question. And then my next thought would be, well, it's good, but the challenge, of course, with the government institution at the African continent is often that they lack resources. So how do you actually secure that you're getting the funding back? So I guess it kind of ties into the monitoring. And is that done by yourself, or are you, if I should link it up, for instance, to our dear colleague from Copenhagen University, Peter Kjær, is it linked up to research? And how do you tie the ends in terms of monitoring? Because that can easily become quite a daunting task in monitoring and making sure that you're actually meeting your targets.
Very good question. Well, first of all, the prevention bond is still at the sort of design stage, but it requires quite a bit of research prior to starting it, because we need to know what is the of this sort of preventive action or intervention that we're doing. What is the typical saving in treatment costs from the intervention? So you need to sort of know that more or less before you do it, so that you can set the benchmark. And then if you do better than that or do worse than that, then the government will pay less or more, or more or less in the end. And then how do we make sure that the government actually pays or the health insurance actually pays? It will be written down in a contract, of course. It will. We may be looking for also to have part of the investment guaranteed by a guarantee facility, either from the EU or from the NIDA or SIDA, those who have guarantees. The third question was the monitoring, the measuring. It has to be an independent third party who's doing this. If Red Cross was measuring it themselves, they would be biased. So yeah, has to be third party independent.
Okay. But then it would also require, I would assume, that it's pretty well-known interventions that you're coming with. So when we're talking about, and if using the word innovative, I mean, the innovative part of this is kind of how you put together your financing pieces. But I would assume that if you should be able to come up with a baseline, you should be able to have pretty well-known technologies actually, or solutions or interventions that you're coming in with.
Yes.
Okay. Interesting. So it's just the connection back to, because
So the innovative part is really just the design. Yeah, good.
Okay.
Yeah.
Right.
And it's not even though we call it a bond, it's not even a bond. It's just a sort of tri-party contract.
Okay. But again, okay, but again, also what you're pointing out here is actually is quite important in terms of having public financing on board for them to understand that they're lowering the risk, so to speak. Is that the right connotation or understanding?
Yes, they are.
Okay.
They're being incentivized to actually prioritize prevention.
Right. Okay. Well, I think it's some very interesting trends that we see now in this whole impact financing landscape. Well, how do you see moving ahead from here? What is needed to really to get it going? I get the message that there's a need for pushing the government institutions, but really, how do we drive this agenda forward? Because at least there seems to be some promising models. Now we have to turn them into reality. Which is often a bit more difficult than putting it all into a conceptual note. So moving ahead, what are the key issues that we need to address?
I think the whole the grant money part is really a big part of it. That often there's a need for some grant element to catalyze or to de-risk the investment. So I think that's a hurdle that many philanthropic foundations and governments will have to sort of overcome and start making specific facilities to catalyze investment capital. This has been very much lacking behind, I think. Then I think for the Red Cross products, I mean, for the cat bond, for example, it was not a problem to get investors at all. They thought it was very attractive. First of all, I mean, volcanoes, they don't correlate with the financial markets. So they get an diversification benefit, and then at the same time, if they then lose some money, it would at least go to emergency, and it would do good. Mm-hmm. So somehow there was a win-win for the investors, and it was not a problem to get the investors interested at all. It was what stopped us from making it the cat bond bigger was the lack of grant funding for the premium payment. And for For some of the other solutions, again, it's the grant element that is quite difficult to get. It takes a lot of sort of long grant applications that take ages to get to get that sort of catalyzing grant element ready. For the investors, what is the next? I think it's just, you know, getting started, showing good cases where investors have made money and have created a lot of impact. I think we need to keep on telling that story, because there are so many cases where that's true.
Lisbeth, thank you so much. I think there's one final question here, and allow me to state that. It's a question whether you are planning to expand to other East African countries like Somaliland. And I would assume that's for the Impact Fund.
Yeah, maybe eventually. I think we're starting in some of the countries that are more investment ready. As I said, it's important to prove the case. And then once we think we are ready for it, we may move into a country like Somaliland, which is definitely, there are some opportunities there as well.
Right. Well, time is now 10:15, and as it is, we are trying to close precisely. So Lisbeth Zacho, thank you so much for your time here today. It's been very useful and some very hands-on insights that we can move on. It's been a pleasure here for Access to Innovation side of it, to have you on board, and also for the audience, for you here today, for joining in these fruitful discussions. So from Access to Innovation, thank you so much for now, and stay tuned at our website for more information and upcoming A2i talks. Thank you so much, and once you get to it, enjoy the weekend.
Likewise. Thank you, Jakob. Thanks for organizing this, and thank you everybody for listening in, and have a great weekend and a great Easter once you get to that.
Thank you so much.
Thanks, you the same.
Bye now.
Bye.
Bye.